Hey, welcome to the Closing Beat, everybody. Happy Wednesday. Hope you're having a great day here so far. This is a quick show that we do called the Closing Beat. Just a quick stock market update show. We're financial advisors here at Jazz Wealth. I hope you'll check us out, jazzwealth.com. We manage your investments, help with your personal finances, your retirement plan, and we teach along the way. Tomorrow is actually our next class. Every Thursday night we do a class, but they're all recorded and put into what we call the dojo. It's kind of like our financial video library. Thinking about making some additions there as well in terms of content based on feedback, because we work with all of our customers here to help and see what's the best way to help you get your dough straight. You know, I sort of joke about it and have that phrase, but at the end of the day, it's what we're trying to do, right? We're all just trying to do a little bit better. So hope you'll check us out at Jazz Wealth. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your screen, you should be able to go to that website, take a guess. Where do you think the Dow is going to close next week? Closest without going over wins a $100 gift card. If you're one of our customers, you can take the gift card or you can have it credited to your account. Either way, it's up to you. You just got to let us know. If you don't win, we won't mark it to you. We don't have time to do that. So we don't sell your email address. We don't do anything. Just simply try it out there. I think I gave away one time. Why is it that we do that? I think I mentioned that either here or in one of our classes. Why would you just give away that for free? I mean, you don't market to people. You don't call them. You don't try to sell them anything. We have our reasons. So that's it there. So class tomorrow, we're going to talk about Nasdaq, of course, the financial planning software that we use. Go into that and help with some of the new changes, show you what's going on there, and answer questions, of course. So here we go. Today is September 11th. It is the 18th anniversary of September 11th. I bring it up because obviously it's an important day, but it is the first day in my life where I actually had that moment where now I know exactly where I was, what happened. You know, they always say, like, where were you when Kennedy was assassinated and things like that. And, you know, I didn't have that in my generation. So that was the first real moment in my life where I can pinpoint minute by minute what I was doing and everything. And they always say, you know, you have that. Every generation has something like that. So I decided to bring that up. A lot of respect there. Be thankful for what you have. And, of course, thank the people that help keep us safe. So with that in mind, let's talk about the stock market today. We got a little bit of a gain on the board, above 27,000 on the Dow. That's probably what they're focused on Bloomberg there. That's a 227-point rally to finish out the day. The S&P 500, look at that number, 3,000. We talked about that on Monday. I'm going to show you the charts. I promise you I didn't change the charts in any way. 21-point gain there to stop right at 3,000, which is the known sort of psychological resistance that we've been talking about. And the Nasdaq up 85 after having a couple days there to the downside. I want to point out the Russell, too, when we get there, because that's now another day of 1% gain. So the Russell 2000 looking good. So what happened? Well, overnight, China basically put out a list of, I think, 16 or 18 different things that they would exclude from tariffs. Some people called it like an olive branch, a little bit of a peace offering before we start conversations with, or before they start conversations with us, of course, in the coming weeks here. But I don't know. The markets weren't really up too much in light of that. It was really sort of midday-ish. The markets just started grinding higher, little by little by little there. And it was kind of interesting where money came from today. So we're going to show that here as well. So let's dive in, actually. Let's get this thing rolling. Make sure we're all fired up. Remember to press the right buttons. Dustin, do you remember to press the right buttons? We want to look at the charts. There it is. All right, he still got it. All right, first we got the S&P 500 closing right at 3,000. Remember on Monday we drew this line and said, hey, what happens if people start believing that that could be resistance? Where would we stop? And so we drew that line to show you. I swear to you, I did not change that line at all. That's exactly where we stopped today. That line's been there every single day. So it lets you know that now it's not me guessing that that could be the area. It lets you know that everyone was looking at the exact same thing that we were talking about since Monday, and now that becomes the next sort of really short-term area to get over to get people excited. It's where the market stopped today, and we're able to close. Now, it's good that we closed on the highs like that. Lets you know that people would have continued to play along. In fact, after hours, we're up a couple extra points, just 2 points there. But it lets you know that people were interested in buying higher if they could. They just couldn't because the market ran out of time. The Russell adding 2% actually on the day. That's a strong couple days for the Russell 2000. I've been picking on this one for months now, saying this is our underperformer. If you're looking at a broad basket of, if you're diversified, which says since September I've been suggesting that, if you're really diversified across all the different areas of the market, that one has suffered. Not anymore. It's making its way back there and having its best 3-day run since February. So very impressive there if you're following along on that one. All right, well, we could look at the Nasdaq while we're at it. We want to go through here is the Nasdaq trying to move back towards highs as well, and the Dow having the 1% day that we talked about, also headed back towards these highs. So looking really good. Now, we've been super focused on the rotation, right? That's the kind of media headline that's been coming out, the money moving out of your growth stocks, your very, very strong stocks. I went through and spent a lot of time on all the stocks that sold off yesterday versus all the stocks that gained, so you could kind of see what everybody's talking about when they mention money moving from growth into value. That mostly continued today with the exception of some really, really fine tuning. It's that now that people have had a few days to go in there and see, all right, money's coming out of growth and it's going into value and some of these other stocks that have been beaten down, now people have had a chance to go, let's be selective about it. So the first 2 days were all the index funds, target date funds, all that stuff, just broadly going into that area. Today it was a little bit more of, well, we don't want to buy discounted junky stocks. The focus today was like on names like Whirlpool, where it was basically strong, right? You would say for the most part, it's participated and it's hanging in there. I get the tariff interest and everything that's going on, but it's hanging in there. But it's still a stock that's performed. It wasn't negative year to date. It was still positive year to date, and that's where a lot of people were looking. So look at like something like Whirlpool. It's not on a rocket ship straight higher. That's where people were focused. Johnson Controls, same concept there. It's been quiet for the last couple of weeks while the market's just teared on and everything. That's where you saw some focus. Legg Mason, another one, focused on just, it's been sitting here near the highs, and all of a sudden people have been interested in names like that to continue this rally we've seen for the past couple of days. Darden Restaurants, there was just a bunch I was just looking at. Not that I'm making suggestions or anything. I'm just pointing out how interesting how these were strong stocks, not necessarily value stocks, but they were just sort of paused for the last couple months, like Darden Restaurants there, so I want to point that out. All right, bonds. So I'm going to pull away here. I want to show, can I do this? I'm sorry if this doesn't show right. I'm going to try to get this to pop up. I need to really spend a minute on adjusting this guy here, but what I want to show is the bonds. So we've been talking about bonds that this sort of stretch, actually we got another week to go, where bonds historically for this little 1 month time period tend to pull back. Prices tend to pull back. And let's see. I think it's going to work, actually. Yeah, that's not bad. All right, so bonds, where the prices of bonds have been pulling back and interest rates had been sort of rising over the last few days. Here's the chart of the actual 10-year Treasury rate. And this is a great example. I'll just zoom in a little bit more so we can see. We've had this massive run in bonds where interest rates have been dropping, prices have been moving higher and higher. But over the last few days here, really strong recovery on the 10-year. If you look at the 2-year, maybe we could just overlay it. Same thing, interest rates moving back higher, so sort of moving away from that whole inversion everybody was talking about. And because of that, you have, well, still the 30-year mortgage rate trending lower, right? No real spike in mortgage rates just yet. Here, that's the light blue line. So still attractive there. The average nationwide 30-year mortgage rate around 3.5%. So still looking good there. The issue, and I'll take this one away, the issue becomes this 3-month over here. Zoom back out for a year. The 3-month still remains inverted to everything else. That's your light blue line there. So yeah, the 3-month is kind of creeping along. It should be lower than both of these, but all in all, it's been crossing above and all of a sudden inverted and staying inverted. It has remained inverted for the last 3 months there, and a lot of people are focused on that. Mistakenly so, by the way. If you saw our class 2 weeks ago on the interest rates, it's a mistake to say, every time the 3-month inverts to the 10-year, there is a recession. While that is true, right? Every time that happens, there is a recession. It could be as long as 2.5 years later. So what kind of stat is that? That's like me saying every time Apple goes above the 50-day moving average, it ends up gaining 5% at some point. Okay, what does that mean? Like tomorrow or what? I need some details there. So unfortunately, that data point is really off there. But I just wanted to point out interest rates spiking higher rather quickly. It's a pretty sharp move from low to high. It'd be the equivalent of me looking at a stock and saying it doesn't normally move that fast from low to high. That's a pretty impressive move there. So if that's worth anything to you guys, just wanted to point that out. Let's go over to the charts here and just start going through this then. All right, sector-wise, you got, well, today was really one of those days where the banks and the semiconductors did what they were supposed to do. And that helps a broad-based rally. Very, very cool study to look back yesterday and the day before. Look at banks and look at semiconductors. We need those two to move together in order to have the markets move higher, right? Tech stocks and the financials. We didn't really have that. So the markets were flat. And yeah, there was a lot of underlying selling and buying and everything, but the markets moved 0.02% over the last 2 days. To the upside, though, so it was still good. Today, you have financials. They were doing their thing in there, up 0.5%. You have semiconductors moving higher, up about 1.25%. That helps facilitate this sort of broad market rally, which pulls that S&P higher on the day. Now, to be fair, if you're digging in there, in the SMH, you only really had 4 names that were helping support the whole thing. Taiwan Semiconductors. It was up about 1% on the day. You had Micron. That was actually upgraded today. That was up 2%. Intel, even though there was some bad news there and a downgrade, that one up about 2% on the day. And then Texas Instruments. Those 4 names were higher on the day and were really the reason why the SMH was higher. They make up 35% of the SMH. So it wasn't like every semiconductor was higher. If you look through, you got Xilinx. Xilinx down about 1.5%, and even AMD was down lower on the day, about 1.5%. So it's not like that was a broad-based rally inside of that one. Going into the banks a little bit further, your regional banks continue to kill it. Great little bounce off lows, sort of reminiscent of the small caps, right? There's a lot of those in the Russell 2000, so they're also starting to participate. That's really cool there. Got to point out oil. That oil breakout crushed today. Now, it's not to the point where people will give up on that move just yet, but it did erase the last 2 days' worth of work. OPEC basically came out and said they think demand for 2020 and 2019, the rest of 2019, is going to be way off their estimates there. And so they're sort of calling on the world to reduce oil production so we don't have this big oversupply when the demand is just not there. And because of their predictions and everything, yep, price of oil was a little bit lower on the day. That's just how she rolled today. So we'll, I'm going to cover something else here. Let me see. There we go. Okay, if you move into Reits, so Reits continue to take a little bit of a break. Utilities did get a nice little bounce, sort of one of those traditional moving average type bounces that technical traders like to look at. You got a rising moving average, you have a nice calm pullback to the rising moving average, and you have what's known as a reversal bar at the 20-period moving average in this case. So sort of a standard traditional kind of a move there in utilities. Other than that, there really wasn't like a standout sector. I could pretty much just wrap it up there. Everything was mostly positive on the day, but like 1/3%. Oops. If you go over to like consumer staples, same sort of traditional bounce off the moving average, but 1/3% gain. Gold was even higher on the day, but you know, it's been beaten down. We get that. Silver, a little bit of a bounce. Just little tiny moves in here as people are kind of like, okay, wait a minute, wait. Should I wait for the Fed? Right? The Fed meets next week, and so you have a little bit of that hesitation. You can kind of see it across some of the different stocks there, and that's really all I have for you in terms of that. Individual stocks, you can tell, money still moving out of some of the leaders like Visa, MasterCard. Oops, there you go. MasterCard still moving lower. McDonald's. We can type it up in there. Still weak, not really attracting any significant attention there. So that continues to be the moral of the story. Couple story stocks today. You got GameStop. I know someone just asked about this yesterday. They had earnings come out. We got low memory. Oh, that's not good. Maybe need a restart. So you got GameStop coming out. They lost 32 cents. They were expected to lose 31 cents. That's not good, right? We talked about this whole idea of them yesterday. Right, or maybe the day before, coming off that low there. They lost 30, what would they lose? They lost 32 cents. They were expected to lose 21 cents. Sales were lower by 12% overall. Just not a good announcement for them. And so the stock suffered. That's what you call 10% to the downside there. Not looking good. Let's try it again here. Move on, see if I can pull this up. You got Costco downgraded by Oppenheimer. Now, this was an interesting downgrade, by the way. If you have a moment, I'll go over and just pop this sucker up. Costco. There you go. So Costco, a little bit lower on the day, was downgraded by Oppenheimer. They say, look, it's up 45% year to date. That's good enough. So their argument was, it's had a great run. We're just expecting to see it sort of take a break. And sometimes analysts can do that. They can say, and they'll use fancy words like saying that the stock price is trading at a premium relative to its current valuation and all this stuff, just basically to let you know, hey, it had a good run. We think it's going to take a little bit of a break there. The analyst that made this guess here has a $300 price target, so he thinks maybe just a sideways sort of choppiness there for a while. and he averages a 61% accuracy rating with a 16% gain. So he's just sort of locking in his deal there, just saying, all right, things were good. Other stocks in the news, you got Boeing. Boeing shot up higher today. That little breakout we mentioned yesterday continuing. They made comments today about the 737 MAX maybe incrementally getting back into being able to fly again in the fourth quarter. And so obviously that's good news. They also said that by the end of next year, they're going to be producing 57 a month when they were at 42 right now. So they're trying to start putting out the positive vibes, saying, hey, we're ready, man. This thing's about there. We just got to get everybody to approve it. Apple was in the news as one of the early leaders today. In fact, it was pretty much strong all day. Check this out. You got 20 of the 32 analysts that cover Apple made adjustment yesterday. So we dug through them there. Average price target, 224.76. It's just a little bit higher than where it was today. There are 2 sell ratings, and those people are very, very bearish on the stock. They think 150 and 155. So the 2 analysts that think it's going down, they're predicting quite a haircut there. There were 9 buy ratings, average price targets around 240 to 270. And so that's really Apple. Just a great day today. One of the, you could argue, value areas starting to move back towards highs. Restoration Hardware added 5%. This is a fascinating study, man. Restoration Hardware, I talk about this every time they have earnings. They sell horribly overpriced furniture. And remember the last earnings announcement, they said they beat on earnings, they beat on guidance, meaning they raised their guidance, they beat on revenue, and they said they were raising prices and we could care less about the tariffs, we're renegotiating and everything. Very positive, right? This earnings cycle, same exact thing. They said we beat on earnings. In fact, they beat by 50 cents on earnings. On revenue, $9 million more than expected, which is pretty sizable. I mean, they do $1 billion. They raised their guidance. They said we're opening 5 to 7 more stores. They said tariffs really have no impact on us. We're all good. They said we're able to still raise prices, and people are buying more and more and more of this stuff. No argument. It's beautiful furniture, but holy cow, looked at a couch. Beautiful couch, the whole thing. I mean, if I look at these things, but it was like 12 grand for a couch. Man, that came assembled, by the way. They put it together for you. It shows what I buy. Anyways, all right, so let's take a look. You've got 66% of the names in the S&P 500 above their 50-day moving average. Small uptick. We were at 56. We went to 60. We went to 62. Now we're at 66. So just adding a little bit more in there. And again, a lot of those names on the list today were some of the quiet names that then finally broke out. They've been quiet for months, like we talked about. Whirlpool, Johnson Controls, Darden Restaurants, Legg Mason. They've been sort of quiet in a range, and they broke out. That was a lot of those names on the list. No new lows today, although I'll point out that Illumina, there you go, Illumina, oh, sorry. All right, so Illumina, that hit the 52-week lows yesterday, rallied off the bottom. We sort of pointed that out today. Well, a little more, I think that's what you would call short covering there, because that's an aggressive buy off the bottom for Illumina. We've been talking about the stats on Adobe, that it's supposed to fall on average of 1.66% or better in the next 5 days. It almost hit that today. I'm sorry, bounced 1.66% or better. Almost did that. Got up about 1.51% today, but although it's a sort of successful statistic at the moment, it's not better than the average, so we'll keep an eye on that one. It has now been 2 days on that stat. Republic Services, waste management company here. If you want to take a look at that one, that's the latest stat. I just found this interesting. 88.9% of the time when it is as sold off as it is currently, it averages a gain of just about 2% in the next 5 days. So I'll track that one with you guys just to have some fun. A couple other things, we'll wrap it up. Philip Morris raising their dividend by, well, they raised their dividend to $1.17, now yielding 6.3% if you're interested in that one. They got a little helpful boost today from the vaping comments from old Mr. Trump. Tilray. Here's a lesson of the day. Tilray didn't do a whole lot today, but Tilray is working with a firm to do what's called a shelf offering. Just to give you the sort of short story, what Tilray wants to do is they want to sell $400 million worth of shares, but they don't want to do it right now. They just want the ability to do it whenever they decide to do it. So they go to a brokerage firm, just like me and you would. We have to open a brokerage firm to go buy and sell shares. So they basically went to, it's called Cowen and Associates. They went to them and said, get us all set up so that we can sell $400 million worth of shares, but don't do anything yet. Just get us set up to do that. Now, what the company will do is they can actually send a note. It's like an actual submission, a ticket really, to say, we want to sell so many shares, we want to raise this much money, we want you to sell so many shares a day, we want you to sell them at certain times of the day. They can actually be hyper-specific with this order, but the point is they have now $400 million in shares they want to sell. So you can look at that both ways. You could say, well, they need operating capital because, well, it's not too good over there at Tilray. Or you could see it as they see a sort of turnaround coming out, and they just want to be able to raise capital into it when people get excited and start buying stock. I got nothing for you. Just pointing it out how a shelf offering works for you in case you're interested in understanding that. Lastly, Oracle released earnings early, sort of missed on earnings, missed on revenue. CEO's taking a leave of absence, and I believe Larry Ellison is going to step in to help out in the meantime. What else do we have? Goldman Sachs says that rally, hey, you've been seeing the rally in the cyclicals over the last 2 days. He said that's just going to be temporary. Goldman Sachs says, don't get too excited, guys. That's just going to be a temporary rally. Their comments, not mine. Tomorrow we got earnings from Kroger, Broadcom, and Oracle. Oracle came out, so Oracle is done. Just Broadcom and Kroger. You got dividends or ex-dividend dates from Crown Castle, Digital Realty, two REITs in there paying $1.13 and $1.08 respectively. ADP was 79 cents. T. Rowe Price, which has been on a tear lately, 76 cents. Domino's Pizza, 65 cents. Gilead Sciences, 63, and Nasdaq, 47 cents. Just trying to point out a few that we may own in our portfolios, so you know what's about to hit you. So the question is, if today was as good as it was, is everybody going to start taking a break into next week's Fed meeting? So we've got the ECB, I believe, overnight tonight, their time Thursday, is expected to cut rates. You got China expected to do more easing, and then we got us coming up here next week. So going to be a lot of focus on, there's going to be a lot of focus on bonds, inversions. You're going to hear those words a lot. Hope you're interested in that because that's about to take center stage. All right. I'll take your questions if you have any, and then we'll wrap it up there if you like. Let's see. I'm going to anticipate something. I haven't looked at the questions yet, but let's see. Earnings on Aurora Cannabis, just in case. I'm sure someone's asked. I know you guys are curious about this stuff. You guys try to pretend. Earnings come in at $11.7 million. Revenue, $98.9 million. We're expecting 108, by the way. All in all, let me see there. All in all, they're going to sell that story of profitability is just right around the corner. That's probably what the focus is going to be. I don't think they've had the conference call just yet, but for anybody that's asking, that will be where we're at. Okay. Tandra, cool name. I still think that it's just a sell the rip and rotation of growth for ECB and FOMC meeting too early to trust the rally. One step ahead. I like it. How'd you get into your career field? I'd like to share your story, and what path would you advise someone wanting to get in your field? Press the buttons. Most advisors, believe it or not, you just have to pass a test. I mean, the test it's basically laws, do the right thing for people, that's the sort of thing. You don't really need anything special to get a financial advisory license. So my suggestion would be to learn as much about how things work rather than just go and taking the test. You're not really useful if you don't take the test. So for me, in all honesty, some of what I do every day, just sharing this with you, is just to show, right, that there's a little credibility there. I would suggest pressing the buttons. If you're already not investing in stuff, buy mutual funds, buy stocks, buy leveraged ETFs, buy futures, sell calls against them. Do all that stuff so that when you start working with clients, or if that's what you're asking, then you can sort of facilitate those transactions. You know what they're looking for, what's too much risk, what's scary, what's the right thing to do, and it all comes from just every day. Press the buttons and read as much as you can. Don't watch the reruns that you've seen 40 times. Read someone's earnings announcement, right? Read through it. Not the opinion, like the actual earnings announcement. Anyways. I didn't look at Uber and Lyft today. I know there's been this sort of really solid correlation there besides yesterday, and I think that continues. In a short-term basis, just highly, highly correlated there. Uber, remember, laid off about 400 of their engineers, so trying to save some money there. And I bet you that saved some good money. Those engineers aren't cheap. So the question is, should you get out of Okada since it was at 60? I don't know what your goal is on that, and I certainly don't want to volunteer you for any taxes if it's an individual account or anything. You got to consider what your goal is. I will tell you, always play offense. This is a great lesson here just for this. If I could just, let me pop this up real quick. So you're looking at I always say Okada, it's Okta, whatever. You have someone asking the question, I got in at 60, should I get out now? The stock has just fallen pretty sharply. That means you're playing defense, right? Never play defense on an investment, on a short-term trade, a day trade, whatever it is. Offense. When the stock is moving higher, you start asking yourself where you should sell to the very people that want to buy your shares. When the stock is falling, now you're on defense, which means you never had a profit target. You never had a number that you would say, I doubled my money. I went from 60 to 120. Should I not take some kind of profit? Maybe a stop loss, trailing stop, put a target, put a sell order up there. Any one of these scenarios you should think about ahead of time, because now you have emotion to think about. Like it or not, whether you care. Yeah, your price target's down, or your average cost is at 60, but now you're emotional about it and you don't know what to do. We have to offset that. So the lesson here for this one is, if you loved it and the stock and you've held it for this long, chances are you were expecting 150 or something higher than that, then stick with your original goal, right? Have some area where of course you'll take some money and walk away, but you didn't like it at 140, which means you were waiting for something higher. Reanalyze, see if there's potential to get to that number, and if not, make decisions from there. And every trade going forward, when you buy it, tell yourself, if it goes here, I will sell half, right? If it goes here, I will sell half. If it falls 10% from where I bought it, I will sell half, or I will sell all of it or something. Very important on those, because you never want to be in a position where you are playing defense. You just, simple as that. You're not emotional on the way up. Like, buying a stock and making a profit is the easy part, right? Because you didn't do anything. You bought it, it did what you expected it to do, and you sold it. But buying a stock that starts to wiggle around against you and hits a profit target and you don't take it and comes back, that's the hard part, because now you're emotional. You got to get rid of that there. What do you think the market is pricing in as far as rate moves with the Fed talks next week? I believe it's like 92% quarter point rate cut. I had it on Monday's thing, and I used Mondays to draw out the next thing that I'm building here, so it's over there. I'm sorry. I think it's like 92% expectations they cut by at least a quarter point. Some ridiculous reason that 60% or something that they believe they're going to cut two cuts. I don't see that. We'll see what happens. I don't know. Watched your video about using the Roth for education. Can I marry myself so I can do another Roth? What do they say? What do the kids say these days? I recognize myself as whatever it is, or my pronoun is they, or whatever. I forget what it is. I was just watching Billions the other day. I assign myself or something, or I forget how my daughter always tells me this interesting things going on in the world there. Dave, answer Dave's question. Is that the question that Dave says, why would, in the world, would anyone want the rates to be lower? I don't understand this. Wouldn't you want to keep them up for the recession whenever that is? Yeah, actually, Trump came out and changed his tone. Well, no, he doubled down on his tone, let's put it that way. He was asking before for the Fed to cut by 50 basis points. Now he's asking for the Fed to push rates into negative. He's saying just do it. Get all the way back down to negative, which is not that far to go, believe it or not. But the question is, why would anybody want to do this? If I were the Fed, I would not want to do this, right? Rate cuts are not supposed to... in the last like 10 plus years, just a little bit around 10 years, we've suddenly moved from the Fed being the backstop to the Fed being the fixer. I hate that, man. There's no reason why the Fed should be adjusting with the assumption of something like all this stuff going on right now. It just doesn't, I don't get it, man. Why run out of your bullets before you have them? That's like saying I'm going to buy a stock at $100. If it drops to 90, I'm going to buy a little bit more. And if it drops to 80, I'll buy a little bit more. And then I'm done, right? That's where I'm at. Well, if all of a sudden you read a news article and you buy all your shares at 100, now you've used all your bullets. Now what are you going to do? And I just feel like, yeah, it's a tough one, but I'm with you. Why on earth should we do this? Let's hold back. Let's see what happens first. Now, I don't know as much as them. I'm just a guy that makes videos on YouTube. So I assume that they have a better feel, and I hope that they have a better feel for this than I do, and that they are trying to sort of slow any sort of thing that is slowing the economy and these concerns all over the world, really. The rest of the world's kind of a mess. So I get that, but I don't understand why you would try to do it now. Now, one last thing. You'll notice, if you've ever been through a recession, and if you haven't, study this one. What happens is, the word recession, they try to talk about it as much as possible. We don't see a recession. Oh, maybe things do lead to a recession. There's a lot of these comments so that the word gets to you guys, because they want you to stop spending money. Despite the low rates and everything, they want you to stop spending money. They want you to pay off your debts. They want you to start saving in a savings account, because if you do that, then the recession is actually less aggressive, right? Remember the 2008, everybody was buying houses, flipping houses, buying 7 houses, flipping 7 houses, flipping houses they didn't even walk into, right? And so we're all doing this, and all of a sudden, recession hits, the rug gets pulled out from under us, and we're in the middle of expanding. You have a bad recession. If we can go to the recession before that, even the dot-com bust there, really wasn't as big of a deal, because if you notice beforehand, there was a lot of talk of recession, overheating, which led a lot of people to scale back, right? So they're hoping that you do that. Right now, I personally don't see a lot of people doing that. I see a lot of people asking about recessions, but I don't see anybody deciding, I'm not going to go on that trip. I'm not going to go to Disney World. I'm not going to go to the Food and Wine Festival. I'm actually going to go with the sold-out crowd. So that's a tough one there. What's your take on Ciena after stumbling out after the most recent earnings call? I haven't looked at it. I haven't actually looked at that one there. We can take a quick look if you like. Ciena. There we go. Well, from a technical standpoint, from the second to last earnings call, we're essentially just pulling back inside of that. So nothing sort of exciting that sort of blew the top off here. That was last earnings. And you have just a nice, normal, calm pullback there. So if today is any representation of how they treated these sideways moving stocks, it would seem that Ciena would be next in line to get some of that action from what we talked about earlier. I'll jot it down here. Let's keep an eye on it just for fun in the short term. You'd love to see a chart of the subscriber growth. How do you do that? I'm supposed to ask you guys to hit subscribe and everything. It's in there somewhere. I don't care. Yeah, I don't see why that's interesting, but sure. Roku all over the map. Yep. A lot of people also believe, just like when you got that comment today about Costco, a lot of people believe Roku is just a little bit overpriced maybe in the short term. You know what I mean? Maybe it's time for a little bit of a break there. Even just a quiet sideways move. Nothing wrong with that. All right, well, it's back to work for me. I appreciate you guys watching here today. Not bad. Hopefully we continue this throughout the rest of the week. You know where to find me if you need anything. We will be back tomorrow, of course. And like I said, if you'll hit the subscribe button or thumbs up button, that helps whatever graph I find to help show one day. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.